Well, hello, everyone. Thanks for joining me today. 10-minute concept call. So I'm Jim Carpenter. I'm filling in for Rick Bailey today. And I appreciate you taking the time for being here with me. After 42 years in the financial business, I've learned it's not just about finding the right product. It's about discovering the right concepts at the right time. You know how it is. Many times the way I'd have a wholesaler walk into my office, and sometimes they'd have, great ideas, and many times was able to absolutely implement just because I received that concept at the right time. And there's other times I have wholesalers come to my office, and it was just like just another sales pitch or comparing their product to other products rather than tell me good value of what was usable, for me today with my clients. And so I quickly realized my time would be better spent elsewhere. So the ones that I valued most were those that came in with real valuable and actionable concepts. The ideas that really made a difference. So today I want to share a concept that's not new, but the timing and application could be a game changer, hopefully for your office. So let me tell you about Mr. and Mrs. Smith. So it's a couple that had a large taxable estate. They had spent their lives building a wealth, accumulating valuable assets, nurturing a legacy for their children. But like many high net worth clients, they were faced with a huge estate tax burden. And they were concerned. But the most of their assets were largely illiquid. It was primarily made up of real estate and business interests. And it created the fear that their children would have to liquidate these assets within 9 months after their death just to cover the estate taxes. Were they going to borrow? Were they have to sell things at a fire sale? Or what were they going to do? So they needed a solution that would transfer their estate efficiently without forcing a fire sale of their hard-earned assets. Traditional gifting strategies didn't offer enough relief. Premium financing through a traditional bank felt restrictive and complex. That's when we introduced them to a different approach. Private premium financing for their irrevocable life insurance trust, or ILIT. So this approach, allowed them to establish a $4 million second to die life insurance policy within the ILIT, providing a powerful tool not only by paying estate taxes, but also for ensuring a smooth transition of wealth to their children. By using this strategy, they overcome the cumbersome process of annual gifting and preserving the unified tax credit for other opportunities. So instead of gifting or using up their UTC, Mr. and Mrs. Smith, they loaned money to the ILET. So this offered them some of these scenarios was preservation of the unified tax credit, keeping their gift capacity intact and using it for other opportunities. Also avoided, minimizes administration burden and avoiding IRS scrutiny since the transfer of a loan rather than a gift, there is no immediate gift tax liability and also preserves the overall tax efficiency. It also allows them to leverage their wealth and transfer efficiency. The interest paid on an intra-family loan is typically lower than traditional premium financing or gifting large sums. The ILIT can use the loan funds that they receive to purchase a much larger life insurance policy, leveraging the investment. Life insurance policy within an ILIT provides liquidity to cover estate taxes, debts, and other expenses without forcing the sale of illiquid assets like a estate or a family business. Then also, by keeping the life insurance proceeds outside of their taxable estate, they could reduce the potential estate tax liability significantly. And lastly, is it enhances inheritance planning. The $4 million insurance policy not only covered estate taxes, but also provided a substantial inheritance for the kids, reducing the financial burden and ensuring a smooth transition. So the premium financing approach was not more efficient than traditional annual gifting, but it also allowed for a lot more flexibility. It allowed the Smiths to preserve their annual gifts that they may want to use for other uses, like contributing to their grandchildren's education or making smaller gifts, meaningful gifts to their children, without necessarily having to dip into their unified tax credit. I want to emphasize a critical point here. The flexibility provided by this strategy is often a rare commodity in estate planning. Many traditional approaches feel rigid. They come with administration burdens like managing crummy letters. Who's going to take care of the crummy letters? The accountant, the attorney, or the advisor? Or facing potential gift tax consequences. But with premium financing, you're offering your clients a streamlined, efficient way to achieve their financial goal. So can you imagine the relief on the kids' faces? Instead of scrambling to meet a tax deadline, they had the freedom and to thoughtfully manage the assets that they inherited, continuing the family business and preserving the estate. For the Smiths, the $4 million policy served as more than just a financial tool. It became a means of preserving the family's legacy. It provided liquidity when it needed most, allowing the children to focus on maintaining their family's values and vision rather than rushing to liquidate assets just to cover their estate taxes. So now the question is, why does this matter to you? As advisors, being equipped with creative solutions like private premium financing can set you apart in the marketplace. When clients present complex estate planning needs, this concept can transform your role from a transactional advisor to a trusted consultant. Think about your own practice for a moment. How many clients or that you may have can benefit from a strategy like this? High net worth individuals, business owners, clients with illiquid assets. These are the people who could see transformative benefits from private premium financing. And by introducing this concept, you're not only enhancing, their financial future, but it's also strengthening your relationship with them. So before I wrap up, let me emphasize this. While the strategy may not fit every scenario, when it does fit, it can create tremendous value for your clients. It's especially powerful for working with high net worth individuals, business owners, and those with unique structures. So I encourage you to think about your client base. Consider those clients who have large estates or illiquid assets, or those who are already concerned about estate taxes. Picture the impact you could have by offering them a solution that not only meets their expectations but exceeds them. So if you'd like to explore the strategy further or discuss a specific client case, I'd love to connect with you, individually. Just reach out to me, and I'd be more than happy to catch up with you. My email address is jim@camisadvice.com. So I appreciate you. Thank you so much for your time today. I look forward to collaborating with you and helping you provide exceptional value, to your clients. So have an amazing day. Thank you so much.